Good morning. I am Bev Curtis with Bev and Company here at House of Brokers Realty, Inc. And I have the pleasure this morning to have Kelly Walters with me here with Flat Branch Home Loans. So Kelly, if you wouldn't mind introducing yourself, please.
Hi, I'm Kelly Walters, and I've been in lending for 16 years, and I'm happy to be here this morning. Thanks for letting me talk to your audience.
Absolutely. First of all, we want to apologize. We had a little technicality this morning as far as going live on time, so we appreciate your patience and bearing with us as we're kind of brought back up to speed here. So one of those things with technology, it's like it either works with you or sometimes it can be a little frustrating. So this morning it was a little frustrating. So with that being said, we appreciate our clients and customers and friends joining in on our Breakfast with Bev on Wednesday mornings. This morning's topic is a happy credit score can equate to a happy homeowner. And the intent of the information given is to be informational. We certainly want to provide value material for our clients and friends so that you can hopefully have a few takeaways and some good nuggets that you can use. So with that being said, the happy credit score, happy homeowner is relating to the home buying purchase. So as we all know, our credit score follows us around. Sometimes that can be a happy thing. Sometimes that can be a daunting thing. And so Kelly here has had a number of years of experience in the lending world and has dealt with many credit score numbers and clients and has given them lots of educational tips and things along the way to improve their credit score, which in turn gets them a really good interest rate and so forth. So let's start this morning then, Kelly, with explaining to us why is one's credit score so important?
Right. So over these years, I have definitely looked at thousands of credit reports. And one thing I notice is that in the home buying process, the home lending process, what we do is we assess risk. So the credit score is such an important part of that because it's the biggest indicator that lenders have to know your ability and willingness to repay your financial obligations. So credit score is a big part of that.
Okay, and so the credit score kind of has a little bit of a mystery side to it because it's kind of three parts and you've got several different bureaus that you're pulling from. So kind of explain to us the breakdown of what a credit score is comprised of, if you wouldn't mind.
There are three main credit bureaus, Experian, Equifax, and TransUnion. And for today's discussion, we'll talk about the FICO. It's basically a credit score range of 300 on the low end up to 850, which would be like a perfect credit score. So the three bureaus don't give us an exact calculation of how they arrive at that number. Like she said, it's kind of a mystery, but we have some guidelines and principles, and definitely we know what your credit score is comprised of. And the two biggest things are not really a mystery. The biggest one being how well you pay your payments over time. And the second thing being how much debt you owe. So credit payments over time consistently are the biggest thing. And then as far as debt being owed, that can be comprised of how much debt you have overall, how much revolving debt or credit cards you have compared to installment loans. And then also on credit cards, this is a biggie, how much credit balance you carry compared to your credit limit. That's a really big indicator. And then that's 65% of your credit score are those two things, how much debt you owe and how well you pay your payments on time. And the rest of the credit score is made up of like 15% of your score is based on how long your credit history is, how new your credit history is, like do you have lots of new inquiries or new accounts, and then what types of credit you use. Are you a consumer that has 3 credit cards and that's the bulk of your credit history, or do you have a credit card, an installment loan, and a mortgage loan?
From a lending standpoint then, is it considered a ding to me if I would have 3 credit cards versus 1? Or if I had an open account, say like a Dillard's card, and I had a line of credit, but I didn't have anything on it, I'm always like, do I close it out? Do I leave it open? It's like when I'm buying a home, do you have any suggestions on that?
Right. So again, it's all back to risk and how the credit bureaus assess risk. So they look at how many credit accounts you have, especially what we call revolving accounts. It's the same as a credit card. And in terms of closing a credit card, that's going to limit your access to credit. So the credit bureaus have this kind of magic formula. They want you to have adequate access to credit, but they just don't want you to use very much. So on a credit card, for example, there's kind of a magic formula. They like you to use no more than 30% of your credit limit.
Okay.
And leave about 70% unused. So this is true even for consumers that are diligent in paying their credit cards off in full every month. For example, a $1,000 credit limit. If you max that out every month, there are certain days during the month that you appear to be more risky, so to speak, to the credit bureaus because you don't have any access to credit if you needed it or if you had an emergency.
Okay.
But if you always try to keep your balances at or below 30% of the limit, that really can boost your score, and I've seen it be very successful for consumers. But one thing I'd like to say, disclaimer-wise, I am not a credit repair expert, and Flat Branch Home Loans is certainly not a credit repair company. But we do have these principles and guidelines that we know have been successful for other consumers, and sometimes the credit report can be so complex and have so many moving parts. We recommend perhaps getting a credit repair expert or a credit repair company involved.
Well, and that too, I should kind of go back and kind of give a disclaimer that keep in mind anytime that we're talking about lending topics in general, whatever parts of that process it might be, it is very heavily federally mandated, the guidelines that are required. And lawfully, there are only certain things that a loan officer is okay to discuss on an open platform like this. And we do encourage your comments, your feedback, your questions. Just know that some of them just may not be in the realm that she can technically discuss on this platform. However, I would encourage you to contact Kelly at Flat Branch anytime, and she can assist you with your personal situation. So one of the other questions that I have for you, and it seems like it comes about because, as we all know, life happens. Life happens to every single one of us. Someone can become ill, unexpectedly. Someone can lose a job. There's just certain life circumstances where funds can get tight. Maybe we fall behind on something. And it's like in those kind of what we call big events, those unexpected big events in life, how would you suggest or help folks navigate through some of those things?
Right. So yeah, we call those big credit events, things like a bankruptcy or a foreclosure or a short sale. And those can definitely have a big impact negatively on your credit score. But along with those, there comes certain waiting periods before you can be considered for a home loan again. So in the case of a bankruptcy, there's a Chapter 7 bankruptcy where all your debts are discharged. There's a Chapter 13 where you reorganize and pay them back. Foreclosures, basically a foreclosure is when the ownership of the home ends up with the bank. It's no longer your ownership. A short sale is when you sell your home to another owner that's not a bank, but you sell it for less than is owed. So all these things have impact on your score as well as a waiting period. And even if your score is not harmed during the process, which generally it is, you can still have a great credit number, but not be able to apply for a home loan because of a certain waiting period.
Well, I think the good news with it is that it is fixable in time.
Right. It's not the end of the world. It's not going to keep you forever from buying a home. Generally speaking, most lenders are going to have a minimum credit score requirement of 600.
Okay.
And then special programs like first-time homebuyer, a little higher credit scores can be required of 640. So in the case of a Chapter 7, we require you wait at least 2 years before you can be considered for a home loan again, and that would be an FHA loan, the federally backed loan. But with each waiting period, like foreclosure or bankruptcy or short sale, there are also exceptions that can be made when there are extenuating circumstances that led to the credit event. Like you said, the loss of a job, something really major. So that 2-year waiting period, for example, after a Chapter 7, before you can look at an FHA loan, you can be considered in as little as 1 year if you can prove, have documentation of major credit event. And what I mean is circumstances were beyond your control, isolated in nature, and not likely to recur. Those are the big three that underwriters look at when evaluating your life circumstances. So I would encourage definitely talking with a lender that has, I have the heart of a teacher. I love to explain things. I love to listen to your situation and tell you what can or can't be done and how to get to the point of being able to buy a home loan. So when there's something major like a big event, a credit event like this, you definitely need someone that can understand your situation and walk you through how long you have to wait, and then definitely what to do in the meantime. You don't just want to wait. You do have to reestablish some type of credit, and that can be hard after a bankruptcy.
Yeah. Well, and probably sitting idle and doing nothing about it is probably the worst thing that you can do.
Right.
It's a matter of literally seeking the correct help and just working on it, chipping away at it just to build it back up again.
Right.
So, but, like we talked about earlier, the good news is it's definitely repairable. It's fixable, and, life is what life is, and sometimes you just have to roll with it. So, okay. Well, at this point in time, I just want to thank you very much for your knowledge and expertise. There's so much that is involved in that credit score process, as we talked about, and it is kind of a mystery to a lot of folks, and our credit score does trail us around everywhere we go. So if you're thinking about making a home purchase and are considering sometime now in the near future, definitely reach out to Kelly Walters here at Flat Branch Home Loans. She does an outstanding job. She's got a lot of years in the business, and she sees many credit scores and reports. So it's like, if anybody can wade through it, she can. And if you're looking to purchase a home in the now or the near future, I would hope that you would consider my team, Bev and Company, here at House of Brokers Realty, Inc. We strive our best to provide our clients with a lifelong relationship, and we hope that you will consider us to be a valued real estate resource. So,
thank you.
Okay, thanks so much for joining in. And once again, we apologize for the technical errors starting off, but we hope you have a fabulous week, and we'll see you next week. Take care.